Good morning from Real Estate Chat. It is December 19th and Merry Christmas. And Merry Christmas to you, Jeff. How are you today?
I'm doing great. Merry Christmas, Blair.
Man, what a season. I think we're going to have a little warmer Christmas than most people think. That just means more golf for you and me, right?
Hopefully.
Hey, we got some great topics today, but the first one I want to kind of talk about because it impacts everyone out there that even considers or initiates or puts in a loan application just to get pre-approved and find out where you're at, and that's called trigger leads. Do you know what trigger leads are, Jeff?
I'm familiar with, but please enlighten me.
Well, I'm sure I can't enlighten you too much, but trigger leads are where a loan application goes in, and then the bureaus, because I do a hard pull. There is a difference between a soft and a hard credit pull. And mortgage lenders do hard pulls. And once you trigger that hard pull, you're turning in a mortgage request. And on there, it tracks several pieces of data, the client's name, social, birthday, but it also tracks the amount and what type of credit they're looking for, which would be a mortgage. Once that happens, the credit bureaus have been selling those leads to other lenders. The Fair Credit Reporting Act allows credit bureaus and consumer reporting agencies to furnish consumer reports in connection with any credit or insurance transaction not initiated by the consumer only. But if the
Wait, you
consumer
mean
approved, huh?
you mean I'm checking a box saying yes, please shop my inquiry to other lenders, right? I checked it.
No, you're
This
not
is what I'd like
checking
you
the
to
box.
do.
No, you don't even have to check the box.
Hmm.
You don't even have to check the box. What you don't have to be. You can't be on, let's say, call transactions or so forth. There is a way around this, but again, any lender doing any work that they would normally do, the credit bureaus get the hard pull. They can sell that to another lender or insurance broker. And what's that cause? That causes unsolicited phone calls to the client. They never asked for them. They weren't even aware they were allowed. And it's only a way for the credit bureaus to make additional money on a transaction because they're already charging that original lender. Now they're selling the hot lead that they verified. Hey, they did look at a mortgage. And so there's already a bill, House Bill 7661, that's in to stop this. But right now, again, every bureau has the right to do that. Now, what we discovered, and this is the trick that we're using to protect my clients, is it's a trigger lead because it triggers off of a certain amount. And that
Oh, okay.
certain amount is over 100,000. Any mortgage pull that is loan amount of above 100,000 creates that trigger lead. So what do? I go in and change the amount for $1. So when I pull, they're pulling a mortgage, but for $1, and the credit bureaus are looking for anything over 100,000. My client drops out.
Oh, wow. Okay.
So then
Good.
the trigger leads don't have to happen anymore.
Okay.
They don't even have to file out of them or call the no call list or all that sort of thing that the client ends up being impacted by. So if we change the amount that we pull on, we can actually get away from trigger leads. So it's sharing with other people that may be listening that are lenders a way to do that. But again, it's protecting your client from unsolicited phone calls. Now, what are your thoughts? I mean, do you think this is even legal or should be allowed at all?
I don't think it should be allowed unless somebody requests. Yes, please let me know. It's happened already. We're talking about. He brought it up. I believe it's absolutely happened with me on a vehicle purchase within the last year. And I guess my other question is to make it even more legit. Let's say, okay, everybody goes, no, this is fine, this is fair. What lenders receive that notification, and how do you get on that list? Because then you've got
You
favoritism
have to
on
be
your side.
buying them.
You're buying into it.
The lender has to buy those
Who are
lists.
they paying? Who are they paying for that?
They're paying the bureaus.
That's okay. That's
TransUnion,
So the Bureau is using my personal information for gain.
Yes.
Okay. Outside of me working to go obtain a loan.
Sure.
That doesn't make a lot of people feel good, I hazard a guess.
Oh,
Doesn't me either.
I would feel used. It would feel interesting, but Equifax, Experian, and TransUnion are making dollars, additional dollars over the original hard pull to make additional money and selling to lenders and insurance brokers.
And that's what they've actually, now I'm thinking about it, that's what they conceivably have been doing through their apps when they're saying, hey, you fit this credit card. Congratulations, Jeff. Your score just went up. You should get this credit card now.
Well, again, you have to understand Credit Karma and all those are owned by credit card companies, and they see that change.
You sign up for it when you download that app, is my point.
Yeah, anybody giving a free credit report does not have numbers on it. A true free credit, all it is about trade lines.
Right.
If you're getting a credit score given to you by somebody, they're trying to sell you something, whether it's a car loan, a credit card, student loan, who knows what it, insurance, mortgages. And so, but trigger leads have caused a lot of people to pull back and get frustrated. I've had a few clients before I understood how this was happening, what was happening. I had clients, why are you selling my information? I didn't give you permission to sell. And we don't.
Mm-hmm.
Why would we do that? But it took a while for them to understand that and for us to track down who's selling their information, because I mean, on Facebook, again, all of a sudden you start looking at something or your spouse looks at something and they're connected. All of a sudden you get bombarded. Let's say, she's looking for Christmas trees and all of a sudden your Facebook page gets bombarded with Christmas tree ads or where you could buy them or what they look like, or no, you shouldn't be doing this. Or it's amazing how they're all interconnected. But people are profiting off of your information being sold and triggering unsolicited calls, offers, that sort of thing.
What if you've got a couple questions. You're making my brain work this morning already, Blair. But
well, drink another coffee.
I'm working on it. So let's think about this. Educate me on. I jokingly said I opted in by checking a box. Can you opt out? Because what if I am on the do not call list? How does the DNC work?
You're supposed to be opted out of trigger leads.
Okay. If I'm on the DNC list, the do not call list.
That's correct. And therefore you should not be receiving, but yet we understand that those people, they don't pay attention to that flash.
Absolutely right.
Flag. Hey, I've been on the do not call list forever and I still get calls.
Yep.
The only reason why we have our home number is so that gets bombarded and we don't get on our cell phones, from all of the calls, the political calls, the donation calls, the solicitation. I mean, it's amazing. When I go in and delete the 65, 70 messages every week, it's just,
Oh, they actually leave you a message. For me, they just hang up.
Yeah, most of them are hang up, but sometimes it goes a little longer and you get nothing. Others, it's an automated dial and it goes into that, oh, we're the police force and you donated 5 years ago and we'd like to see you donate again. So, yes, if you're not supposed to be receiving these if you're already on the do not call list.
Okay.
So
at least good to know that they're in line with that, even though they are the feds.
Well, no, they're not. It's not the Fed. The bureaus are not government connected. They're not government related. All they do is store data, and they're paid to store it. They're paid to share it, and evidently now they're promoting their marketing to get paid for those leads.
Interesting.
And I guess they're making money hand over fist. I don't know. It seems like it.
I mean, that's in any kind of business and industry, when you're marketing, when you're working to create opportunities, that's what you call a hot lead right there, though. There's not a warm lead. It's not a cold call. That's a hot lead. So I could see where a company would say, heck yes, I'll buy into that. I want those leads.
Oh, definitely. Definitely. Well, moving on, we're going to talk about market conditions, where we're at, what's going on. So, you got anything new and aware?
I don't know about anything that's more as far as on the new. Well, we're seeing the rates drop. We're hearing about the rates drop. But Blair, I think more
6 weeks.
importantly, what
6 weeks.
more importantly, I think a lot of people get excited. And Blair, I'm building up to ask you this question. There's a difference in when we initially hear about the Fed's dropping rates as to banks dropping rates. Am I in line there of the initial what we're hearing and how quickly we're going to see that down to the actual consumer? Is it
Wow.
there?
Now, when you mean banks, you really mean lenders. Is that correct?
Correct.
Okay. So again, yes, there is a difference. The Fed rate is the bank transaction rate that banks share money or borrow money based on their need. They have certain FDIC requirements for cash on hand. They have certain lending capacities, and depending on if they're playing in the stock market or doing CDs or anything, they borrow money. That's the Fed rate. And the Fed has not said they're cutting rates. They did not raise them this December, which is a wonderful thing. And in fact, the Fed chairman, Jerome Powell, this past week talked about possibly seeing cuts happening in early 2024. That reacted in the market very well. In fact, we have 6 weeks of literally market moving, rates moving good in the sense of rates have come down. We were playing in the 96th percentile. Now we're in the 101. I understand BIPs don't mean anything to people that may be listening to this, but what you want is we were playing in the 112s when we had the twos and the threes. So again, the market's moving in the right direction, but are we hearing all of the right things? No, we had several chairmen of the Fed walk back some of those terms. Well, inflation hasn't been impacted enough. Others are saying inflation's been impacted enough. And I wish I could share a slide, but it shows where in 2024, over 75% of the Fed chairmen that will be voting members have decided that they should see anywhere from 3/4 to a full point decrease in the Fed rate. That news is what has taken us in the last 5 days to very good rates. And hopefully we're going to start seeing a true par rate on a rate sheet. So right now, the best outlook I can give you, the best one, and this is probably too far, but we could probably see in the low fives by the end of Q4 of next year. But I'm going to say we probably by the Q2, we're going to see a Fed rate of a cut of 50 bips.
And so so all in all, what that does when you hear the Feds, am I mistaken here? It just gives the banks, the lenders, more confidence on saying, "Hey, is that a fair assessment there?"
Well, what it also tells them is that it's not going to cost them as much money to borrow that money that they use for business. So
Right.
now they can lend money at a lower rate and still make the same profit margin.
Right.
So now lenders, we have rate sheets. Rate sheets are set by Fannie, Freddie, VA, FHA, all of that, USDA. Those are set by them. But now we look at those sheets changing in a positive way and rates going, like right now, the cost of certain rates have decreased. In fact, I saw for the first time on a conventional mortgage, actual par rate, which means it costs the buyer no dollars to get this rate. That's the first time I've seen that in about 18 months. So now as we start seeing that come down and that being impacted in the the high sixes, the mid sixes, the low sixes, par rate being there, people can, what they're used to, $2,500, $3,000, depending on the size of the loan, they can buy into the high fives, below 6. All of a sudden, that's going to increase a lot of activity because, again, 2.5 to 3 we stayed there too long. it was manipulated to stay there by the Fed buying so many mortgage-backed securities for so long. They did it wrong, and then they flooded the market. When they started flooding, that's when rates went back up with these bonds that were secured at such a low percentage. Inflation was caused by that. So now we're fighting inflation to get it back. It's happening, but they need to do it in what they call a quantitative easing.
Mm-hmm.
That's what we'd like to see. Mortgage rates unchanged, but they have changed. They have seen minimal change down to 6.5% on the 30-year. Well, that's below 7. So you can't say it hasn't changed. It has changed.
That has big change.
But it's still not changing what the Fed is saying until the Fed is giving different indications. They're walking back. They're trying to play the game. But again, every indicator we have, from the PCE, personal consumption expenditures, to different reports. Let me pull them up here real quick.
Well, and as you do that, though, even still getting down to what is now, that's still a point better than what folks were receiving in the last month. I mean, that's a chunk.
That is,
and the lifetime of that mortgage.
Well, and again, people not involved, they're reading the Wall Street Journal who's saying, hey, we're going to have a housing crisis. I mean, I think they're the only people saying home cost or home values are going to come down. Everybody's talking about this, and yet it's not true. We have not seen a single thing that tells us. I mean, consumer confidence is high. Existing home sales will come out tomorrow. Housing and building permits, housing starts today, are all positive, showing that our faith or the outlook for homes coming online in the future are positive. Home prices have not fallen. I think a lot of homes have been overpriced, that they've been right priced when you see a price come down. Homeowners are the ones that drive the selling price of a home. The realtors can advise them,
right,
but they can't tell them what to sell their home for. If my home, and they're saying that my home's worth $695,000, and I say no, it's worth $755,000, and that's minimum whatever, then they're going to put it on the market for $755,000. I mean, there's nothing we can do about that. But if you see that price come down, all of a sudden you think the housing crisis, and that's what Wall Street Journal is saying. We're seeing a crisis, and no, it's a right sizing of the price of that home.
I was just about to say, we've been seeing this incline for such a long time. We don't need it to be at I'm speaking of the valuations, property values.
Yeah,
it's been on a severe up.
Oh yeah,
that's what we needed just to plane out. It's not going to be a crisis, but I think the good thing, and tell me if I'm wrong here, I'm hoping, first of all, as some of these new buyers come into the market, the inventory is a little low. So it's going to be a little bit of a battle on some of those properties again. But what is the thought process then to hope? That doesn't mean people are going to pay $35,000, $50,000, $100,000 over to win that contract, because the valuations are still an awesome property, still a great value for your money. But I think, would you say it's safe to, I hope that's not going to be the same scenario? I mean, I'm saying hope. We obviously can't predict it, but I would hope that those conditions together keep that from happening as well, what we saw in the past.
People that we have in the market right now, the actual potential buyers that are active, we don't have a lot of competition. The minute the competition, that's going to drive prices back up, and it's going to drive that, what you're saying, we're not going to get away from bid over asking.
Right.
Now, I'm able to give a bid over asking valuation. If you're paying $35,000 over and above, you're going to see a return on that home, let's say in 6 months, and that's going to be worth it to you, or maybe 12 months if it's more. The thing that I think a lot of people are talking about, and they want to see a housing crisis happen. What happened in 2008? We had more homes on the market and less buyers. Right now, we have less homes on the market and we have more buyers available. Prices are not going to fall. Now, again, I say a home that's overpriced is not going to sell as quick. Right now, I've got a home in my neighborhood that's been purchased by Redfin. Redfin buys those homes if they don't sell them in a certain time. Well, that home has been sitting empty for over 3.5 months because it's priced outside of what homes are really valued at. They overestimated. Now they're waiting. They're sitting on the home, waiting for the market to turn around, and that will become competitive again. But the bottom line is, when you overprice a home, yes, you're going to see prices come down. But we have not seen any indicator. And in fact, we have if we have a total of 10 analysts or experts, economists looking at the housing market, only 2 of them are saying home prices are going to drop. 8 of them are saying, no, it's going to increase, and it's going to increase even more, because what's going to happen? Interest rates go down. All of a sudden, more people that have been waiting are going to realize, well, this may be the best time right now, because we will never get back to 2.5%, 3% in our lifetime. And so a 5.5, a high fives, a low 6 interest rate could be, hey, this is where it's at. I'm going to jump in because I need to get in here. And all of a sudden, competition drives that price back up.
Right.
Bid over askings are given. And so we still have people moving from California, Illinois, New York, Connecticut to Texas. It's unbelievable. Seattle, Washington, Portland, Oregon. A lot of people are leaving those states right now, and we are seeing that. So we have more competition here in Texas than anywhere. Plus, we have one thing outside of everyone else in America. Texas has an 80% equity position on any refinance. You're not taking 110% value of the home. How many foreclosures we have in California because somebody cashes out, refinance 110% value of the home, and then never pays that back.
Wow. And
leaves. So we are watching our real estate values. That's why we base, the reason why we have that law is that this state has property taxes, and we base the running of our state on those property taxes.
And the value of home ownership is put at a very optimal mindset too.
I'm sorry?
And the aspect of home ownership. Texas as a state protects the homestead and protects that in the aspect of, this is my property that I'm living in.
And also, let's not forget what happened this year. They passed the bill of $100,000 deduction off of school ISD taxes. Right. My goodness, my taxes alone fell $900.
A lot of folks here locally, we were looking up, reading, and calculating. But if you're still looking to move in, yes, please know that makes a difference on that value. On your property taxes. I do think it's interesting too in the market what we've seen, and just this is what's been happening for a while. But I think it's a telltale sign of what's been happening in that Austin in the last 15 months, for example, was just a dying market. So they say. I'm going to use the they say, right? It was just no deals, nothing was happening, everything sitting. Well, the article's out this week. Austin and DFW, #1 in the nation place to go, property values and move to. So I think I'm not saying that's a negative. I'm just saying it's indicative to say what's been happening over the last 18 months. Is that fair?
That's fair. I would agree. But one thing that this came out just this Monday, what is called the mortgage credit availability analysis. And what it is, mortgage credit available index decreased for the first time in over 12 months. What that means is a decline in this indicates that lending standards are tightening, that guidelines or limitations. We don't have as many down payment assistance programs out there helping people. We don't have the quantitative easing that we have. So again, lending standards, a lot of this is driven by the non-QM and jumbo loans that are out there. And when I say jumbo, that's anything over the conforming standard, which is 766-200, if I'm not mistaken. It just changed recently. Again, VA follows conforming. FHA is over 498 now. But if you go outside that, you're non-QM, non-standard. And jumbo loans are outside of that whenever you're borrowing $1.2 million in a standard area, $2 million homes. And so we've seen a decrease or a tightening of those types of solutions. Like bank statement loans are not taken as easily now. I just got one in. We're having to do a 50% valuation on their deposits. That means I can't do any better than 50% of their deposits being their income, that means that lowers that value of what they can buy. So the bottom line of it is, with all the tightening of the guidelines by these areas, non-QM and jumbo, shows that, hey, it's a decline of lending standards of credit available, being offered or being available to people. Now, as we see rates come down, I think we'll see that open up even more, because then dollars, you're able to make more dollars, you're able to transaction more. That will be a positive thing. But we're seeing that tightening, credit tightening right now just happening. So going into the new year, I think a lot of people in guidelines may or may not get pre-approved for these facts.
Well, let me ask you something. How does it affect then? One of the things that's happening right now on the market, before even we're seeing these numbers change a little bit, builders are buying down the rate for a consumer. But so when I come in and I sign up with the builder, and I was told just recently, a guy who works with the builder said, "Hey, we got somebody at 4.25." It's like, whoa, that's awesome. The builder's buying that down, but does that change? How much does that change their actual buying power if someone bought down a point or something of that, like, because a lot of those, they're going into also, they're doing arms on some of those, I understand. So touch base, if you would, a little bit on, does that, my first question was, does that change my buying power immensely just because they bought a point, or is that just more helping me get in the front door?
What's the reasoning they're offering that? A 2-1 buy down offered by a builder is that I'm going to pay for that. Okay. They're not going to need to pay for that with more people in the market. They're not going to try to be attracting. So that will go, right, just like the down payment assistance programs have gone to the side to wait. We're going to see builders stop those types of offerings as more people jump into the market.
Right.
So you can't count on that being there 6 months from now.
Oh yeah.
If you get it offered, get it in writing, get it signed, get it done. Because if you just said 4.25, that's not even on the rate sheet.
That's what I
below
was told.
The rate sheet. So what that tells me is, if it's true, then that's a hard money lender. What that means, they're keeping them on the books themselves in their own financing until they can sell it profitably.
Okay.
And again, if you get that type of offer, please get it written down, because that's an unbelievable offer. Again, I don't know all the cost structures of that lending decision, but you don't see offers like that. You won't see them in the future as more people jump in the market. And that's why we're seeing housing starts and permits going up. We saw a decrease or an increase today. So that's a positive.
Just think about it. There's still the housing starts in DFW is still, I think, 40-something thousand behind. It's been in the 50 range for a while. So that really hasn't changed. So again, that goes back to, this is boosting the confidence. Just some of this positive input, just boosting confidence overall, and that includes the builders. Well, they cannot sit on those properties if they built it out. Lots one thing, and I'm speaking the obvious. It's one thing if you're sitting on a bunch of lots. It's nothing if you started building homes on those. You want them.
Well, they've decided not to purchase land. They've held off. They're not developing. Mm-hmm. The jumbo or the $1 million homes, the $2, $3, $4 million custom builders, they've got lots and they're paying on them. But the problem is they're just building 1 to 2 homes a year, and you're 5 years out.
Right.
So they already have contracts to fulfill to sustain them as an equal pace. Now, if things ramp up and interest rates go down, they can choose to do one or two things: increase their production or sell that lot and have another custom home builder come in on that. Either one is what they'll do if they feel like they're going to make a larger profit. Right. But right now, builders have been slowly growing, and until builders see an increase in competition and numbers coming in their door, they're not going to go to the 2-1 buy down plans. They don't need to, and they're not going to increase their production until they see that starting ramping up and having signed contracts. So right now, again, the starts of homes, they're sustaining themselves, but it is not in a positive. Anything over 50% is a positive. Right now, we're still in the mid 40s. So that is that's just a control measure so they ensure their profitability. They don't want to go overboard with building and then all of a sudden be out of land, being out of production, and having people sitting around sucking up money while they're waiting for things to be able to start back again. But everything's pointing toward that. Now, I have one person talking to us about mortgage rates could drop below 5 if the inflation continues on the current path. Mortgage News Daily Chief Operating Officer Matthew Graham has stated we could be below 5. Now, his reasoning is valid on historical, but I don't see that happening due to an election year, as well as I don't think the Fed is going to drop and cut rates more than 75 bips. If they cut over, like he's counting on them cutting 1.25 bips, so that would be a huge cut in the Fed rate. So again, I don't see that, but again, it's out there. And now I want to move into an area that I think people need to be aware of, because the largest servicer, Mr. Cooper, has confirmed cyber attack did take place and their personal databases were compromised. That means contact information of all of their servicing clients was possibly stolen. What does that mean to people? Well, if your information was stolen, then you need to be checking on your credit. If you don't have your credit frozen, then you could be in care of fraud. Or title. Could titles be stolen from that? I mean, there's a lot of different things that could go on with stolen identity. And a servicer who services loans has all that information, and they have just confirmed that they were hit 4.3 million customers the end of September 30th. Now, let's see, September 30th, October, November, and they admit it finally in December. 2.5 months. A lot of damage can happen if you wouldn't have. Why wouldn't you say something earlier? I guess is my opinion.
There is, and I'm not, as far as for federal regulations, and I'll say this with what little I know, because I'm not, don't record this and go, well, Jeff Duffee said. But
well, we're recording now, so
there is an avenue of you have so much time to report once that break-in, I'm going to call it a break-in, that ransomware, whatever you want to call it, once it has happened, you do have, I thought it was 6 weeks, but you do have a time frame of when you have to report it to the public while you gather and know exactly what happened.
Wow.
Because many know that Fidelity, we just went through that. So there is a time frame of you have the ability, and these
yours was ransomware
companies. I'm sorry?
Yours was ransomware, right?
That's exactly right.
So this is actual
data
straight
theft. Mm-hmm.
Yeah, this is data stolen information that could be sold on the black market inside of 2 days.
Worth a lot, they think.
Well, it's worth a lot, plus a lot could happen. A lot of credit cards, a lot of auto loans, a lot of whatever could be taken.
Mm-hmm.
And people just need to know what they need to be able to do on that. One, again, you get free credit report from each bureau. Take advantage of that. Draw one. What I do every 4 months, I take a new one, Equifax, TransUnion, Experian, every 4 months. But also what I've done is I've frozen my credit.
Okay, I was going to ask you 2 questions. I wanted to say, take a step back for those who may not realize, and talk just a little more detail on freezing your credit and what that does.
A lot of this credit monitoring and all these services that you pay for can be taken out of the picture by freezing your credit. And what does that mean? That means I freeze my 3 credit reports so nobody can pull credit unless I unfreeze them. And only I can do that. So if somebody tries to do a credit pull on for an auto loan or a mortgage or a credit card, it's going to be frozen. And the lender or the creditor is going to be able to, well, you have to unfreeze your credit. Let us know when it's unfrozen. And the action stops there because they can't unfreeze it. So I literally know of nothing happening in my credit report when I have all 3 bureaus frozen. nothing can be done until I decide.
Can you set that up online? And can you have to do that for each bureau? Is that correct?
Do it for each bureau and can be all done online, and you can undo it online. It doesn't take a lot, and you can, when, let's say I go in and I'm going to get that new Shields credit card because I'm going to get 15% off of that
Well,
new.
we can have some fun in there, couldn't we?
Yeah. Go in. I put a 3-day opening on all my 3 bureaus. I go in, they pull the credit, and in 3 days, that's going to lock back up and be frozen. So the odds of somebody doing something with my information, even if they have it on between those 3 days that I'm doing, I know about the one pull that's from Shields, and then the others are going to be frozen off. Again, I have not had an identity theft issue. My wife has. We worked through that. It was challenging. It's slightly overwhelming, but you want to protect your credit no matter where you're at, whether you're in the 5, 6, 7s or 8s. It does not matter. You need to protect it and know that you have control over it. And so by freezing your credit reports, you have complete control over when your credit is pulled and by whom.
And I think the crazy aspect of, even with what Fidelity, with what our company went through, and I do have to add a plug, and we lost absolutely not one piece of data, personal information, dollar, anything was lost, which is unheard of. But it's really a testament to how things are set up. But we're a gigantic company. Staples was hit. Mr. Cooper was hit, as you talked about, but Staples was in the last 3 weeks, I think. I mean, there was 3 or 4 others. These are large companies, so we just need to know and how to prepare and plan to protect ourselves, because our data is out there everywhere. That's just somewhat inevitable in our lifestyles. If you haven't, know Blair's here. He's a great, obviously, if you're listening, he's a great person of information who's there to help, and that's the biggest thing. Make sure you ask questions and reach out to say, what can I do and how can I make this happen? So I do want anybody who's listening to keep that in mind. Blair will be happy to talk to you and make sure you just feel comfortable about where you stand.
Well, thank you for offering my services.
Well, you're smarter than I, so what else? I'm your yuck monkey. I'm just sitting here on the sidelines.
Oh, whatever. Oh, now I've heard everything. Well, we talked about some market conditions. Is there anything else out of there? We've hit the 3 areas that we thought were critical that people needed to hear about. And I'm looking to see if there's any other key data points. Again, credit tightening, rates have come down. Well, I guess we can't. I said it without really stating it. The Fed is done raising rates. I really think that's true. Every indication, that's why rates have been coming down. The Fed is done raising rates. Now is the consideration of when they start cutting them. And of course, I'm also going to say, look at it for what it is. It is interesting that all of a sudden now, with an election year coming, that this is happening as well. Is it connected? I don't know. But yes, mortgage rates will drop and Feds will be cutting the Fed rate. That will positively impact rates, mortgage-backed securities, very, very soon. So that's all I got today.
That was a lot.
Is there anything else you got?
I said it a second ago. I just want
the Cowboys are letting us down.
I expected that. I totally knew that was going to happen. You can't have a team like Buffalo.
I expected it, but why shouldn't I be able to expect it not to happen if they're being ranked so high? He's MVP, all of this, and what happened?
Because Buffalo is a great December team, and they needed it and wanted it more. That's all it was.
No, that's what
they wanted it more on Sunday.
The players are ready to play for, and no, they're not a good road team. They're a great home team. They made the playoffs. Whoopie-doo.
Yeah. They're done that. Let's make it past the divisional round.
If it's on the road, they're going to lose. I mean, it doesn't make sense.
Mm-hmm.
But thank goodness Philly lost last night.
Yeah.
So We're still tied for the lead.
You know, they just want to keep us hanging on there. That's all it ever is.
Yeah. Hey, Texas Longhorns won the NCAA Division I volleyball, and they have a chance of winning the football if they can get past the Washington Huskies.
Right.
And I think they'll play Alabama again because I think Alabama will beat Michigan.
I believe that's true. There's a case of when you bring in Bama, there's that experience factor that it comes out of nowhere sometimes.
And nobody wants to say it, but yes, that's what the playoff committee wanted was Alabama in, and so they had to put Texas in because of the loss. So,
yep.
I mean,
it's gonna be fun holiday season with the bowls.
Well, Merry Christmas, Jeff. Thank you so much. Merry Christmas to everybody out there, and Happy New Year. And Head Monkey Butt, we want to say Merry Christmas to you too, sir.
Thank you for keeping us alive and on the air, sir.
Amen. Amen. Well, I'm Blair Thomas.
I'm Jeff Duffee.
God bless. Merry Christmas.
Merry Christmas.